straight quarter of growth with broad-based strength. E-commerce grew 28% in the U.S. That's slightly outpacing the global e-commerce growth. Walmart Connect, that's the advertising business, it grew 33% in the U.S., 53% globally. I spoke with CFO John David Rainey and asked how Walmart didn't see the same macroeconomic pressure on its results as others have called out. He said, if there's a little incremental strain on the consumer, they're only going to become more selective, to look for more value, going to become more choiceful. We continue to demonstrate that our value proposition is resonating really strongly with our members and consumers. Convenience is also part of the equation, though. Rainey said consumers of all incomes are opting to pay more for faster delivery. Quote, a third of our orders from store, people are taking advantage of that faster delivery time for a fee. That revenue related has increased 70% year over year. And then he went on to say that even in the first couple of weeks of the month, when we saw that there was an impact from the SNAP benefit lapse, it had an impact on this part of the business, meaning that even lower income consumers are taking advantage of this expedited delivery within 1 and 3 hours. Now, Rainey also said Walmart continues to gain share among higher income shoppers, noting that we've been gaining share among all income cohorts, but as we've noted for several quarters, they're more pronounced in the upper income segment. And we should also note some news here. Walmart is going to be moving its stock listing from the New York Stock Exchange to the NASDAQ as of December 9th. It will stay with the ticker that it is currently, which is WMT. Becky?
It's a big win for Adina Friedman. That stock this morning up by about, actually it just jumped 1.75% on this news. If you look at the stock and how it's performed over time, it's been pretty impressive too, although it did see a pullback on the news that the current CEO, Doug McMillon, is going to be retiring.
Yeah, that's exactly right. I mean, when you even look over the last 3 months, you know, it's done well, but maybe not as well as you might expect based on sort of some of these results, because we know there's been this macroeconomic pressure on the consumer. But Walmart here just proved today they've sort of either been able to defy it or they've become an answer when consumers are feeling that incremental strain. And yes, there is going to be this CEO transition at the beginning of next year when John Furner takes over for Doug McMillon. Remember, Doug McMillon will have been CEO for almost 12 years. Walmart really likes its CEOs to stay for about that 10-year time period. And perhaps if he's not able to give another 10 years, it makes sense that this is the time. Pass the baton to John Furner, who's been part of the architect for the current success plan right now. You also don't want to risk losing John Furner, too. So, yes, I know everyone's going to be sad to see McMillon go when it comes to both the employees and the investors for what he's done for them. But it also feels like John Furner is a great choice as well.
Court, thank you. We'll see you later.
It is 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Becky Quick. Joe is off today. Got a lot going on. Take a look at the markets this morning because NVIDIA shares, they are higher. That's pushing the rest of the markets higher as well. This after the company reported revenue of $57 billion in the most recent quarter. That's up 62% from just a year ago. And on that call, CEO Jensen Huang rejecting talk of an AI bubble. We're going to dig through that report with an analyst in just a few minutes, but a lot of folks quite bullish about all this. The Commerce Department approving advanced AI chip sales to state-backed companies in Saudi Arabia and the United Arab Emirates. That announcement coinciding with Saudi Crown Prince Mohammed bin Salman's visit to the White House. And it is Jobs Thursday. You heard that right. It's not Jobs Friday because we're getting Labor Department data from back in September. The September jobs report that we were supposed to have gotten, that's coming today at 8:30 Eastern time. This morning, of course, that was delayed because of the government shutdown. Meantime, take a look at the futures, 198 points, 200 points on the Dow, looking to open higher. The S&P 500 up about 71 points. The NASDAQ up about 365 points. And let's get over to Frank Holland right now, who's got a look at this morning's big pre-market movers. Frank?
Hey, good morning, Andrew and Becky. We're going to start off with Palo Alto Networks. You can see it's pulling back more than 3.5%. Despite reporting first quarter results that beat estimates, analysts are pointing to slightly underwhelming revenue forecasts for the quarter. The company also announcing a deal to buy cloud platform Chronosphere for about $3.3 billion. Shares pulling back more than 3.5%. Also looking at Block this morning, these shares, they're popping. You see they're up just about 2% right now after the company says it expects annual gross profit to rise in the mid-teens over the next 3 years. The fintech company also announcing at its investor day it plans to expand its stock buyback program by $5 billion. Now, this new guidance coming just about 2 weeks after Block reported disappointing third quarter results. Shares over the last year pulling back more than 29% right now, though 2% higher. All right, moving on to shares of Google parent Alphabet. They're higher this morning, almost up 2% right now. On optimism surrounding its new Gemini 3 AI model, Google said the new model allows users to get answers to more complex questions and requires less prompting. Gemini 3 going up against OpenAI's ChatGPT-5. Alphabet shares, they closed up 3% higher yesterday to a new record high. Right now, like I said, they're up just about 2%. Andrew, back over to you.
Okay, Frank, thank you very, very much.
Alternative asset manager Blue Owl calling off a merger of two of its private credit funds. That news spotlighting concerns over the health of the industry. Joining us right now is Eric Becker. He is the founder and co-founder of Crescent. He's also the author of The Long Game, a playbook for the world's most enduring companies. It profiles firms like NVIDIA, Hasbro, and Whirlpool, many of those companies lasting for decades and decades and decades. And Eric, thank you for joining us this morning. We'll talk about the long game in just a moment, but I'd like to start with the situation in the private credit markets. It's a perilous situation. It does have a lot of people concerned. Jeffrey Gundlach earlier this week said that the next big crisis in the financial markets is going to be private credit. What do you think about what you're seeing, what you're hearing?
So I think that private credit is a very important part of our economy. It filled an opening that our banks had pulled back from, and I think it will remain a very important part of our economy into the future. But like all things, we have to watch this very carefully, and a lot of it will come down to manager selection. The very best managers have very diversified portfolios of loans, and they have structured these loans thoughtfully. So what we're hearing, or what we're seeing at Crescent from our managers, is that they feel very good about the credit quality in their portfolios.
Yeah, I guess you're right in that private credit had to step in where the banks had pulled back. I guess the difference is when it was on the banks, we had some sense that we understood the balance sheets, we understood where the loans were, and that somebody could kind of suss these things out. It's tougher to do when it's private credit.
There's no question that it is a different system, but it is an investor-driven system. And so, as an example, when we are evaluating managers at Crescent, we're doing our diligence, we're keeping in touch with them, and we're getting a lot of data on how those portfolios are performing. And the key thing in credit is diversification. So the best managers are performing. And while we've seen some cracks in terms of some of the stories that we've heard where there's been fraud or other circumstances, and that should give us pause. Right. I feel that we're actually in a pretty good spot right now, at least with the very best credit managers.
Right. Eric, you know, the conceit of private credit is that it should be safer for the system overall than necessarily in the banks, in large part because there's not what they call the duration mismatch. The idea that, you know, at a bank, we all could need our deposits back and want to go to the bank and try to get the money all at one time. And in the context of private credit, you're effectively saying, here's the money on year one. I'm not getting that money back for 10 years, and I know what the deal is. The question, though, today is how connected these funds are back to the overall system and the banks themselves, which is to say, you know, how much leverage are some of the banks providing some of these funds? What kind of liquidity lines are connected to them so that if, in fact, something does go wrong, is there a possibility of contagion or not?
I think that the nature of markets is that there's a lot of enthusiasm, whether it's in an emerging new asset class. There's been a lot of discussion every day about AI as an example. And so certainly we will see some managers will not be as successful as others. But I do think that it was a very important innovation, the development of private credit, to fill that need for businesses in America and beyond, and that it will be with us very long time into the future. But you're right, it will be tested, and we will be tested just like it is in any asset class.
Well,
but the high quality managers.
What I'm trying to get at, though, is just how connected it is to the system. So one of the reasons, by the way, that this system was built was not simply because people thought this was a better mousetrap. People thought this was a better mousetrap because it didn't have the same regulation that was implemented after the 2008 financial crisis on the banks. So, you know, we regulate one thing and then something else emerges. That's how this That's how this really happened. I mean, there was private credit prior to this, but the emergence of it as sort of, and its popularity and everything else. And so my question is how connected back to the larger system do you think it actually is?
Well, there are relationships with the banks. There's no question about it. And there is leverage that's utilized in these funds in differing amounts. So there is a connection. But I remember when this started and there was a great need, our economy, small business in America is a critical part of our economy, and they were struggling with access to credit. So private credit was an innovation to solve that, and I think that it has done a very good job in meeting that need. I don't see a concern right now, at least in the managers that we're with, on the quality of their portfolios, the connections that they have to their lenders. What we're seeing actually is a very highly diversified funds and a lot of quality in the companies that are in there. And where they sit in the capital stack, if some of these companies struggle and fail, they will take those companies over and work them out just the way that banks did for 100 years.
Eric, the book is The Long Game, and the catalyst for it was your father's business that provided Christmas holiday decor for shopping centers. You said it only lasted 53 years. That's a pretty long run, but you were looking at companies that last even longer.
Sure. So I grew up in Baltimore. My dad was the first one in our family to go to college. He went to University of Maryland. He hired his fraternity brothers to dress up like Santa Claus, and he rented them to department stores like a temporary service agency. And as only could happen in America, department stores became shopping centers, became malls. And in the 70s, 80s, 90s, and the early 2000s, that was the center of commerce for all of our families. So for 53 years, if you took a child to the mall for Christmas and had a photo taken with Santa, that was our family business. But my dad struggled with succession and even doing an ESOP and selling the business to his employees, which was an amazing thing for Santa Claus to do. He struggled with succession, and the business was eventually sold after 53 years. That piqued my curiosity in terms of why it couldn't have gone longer. And it started a research project now, which I've done for quite some time, studying companies, organizations, and families that have lasted 100 years or more. Today, I happen to be in Asheville, North Carolina, broadcasting to you from the Biltmore, which is a fantastic example of that in terms of a long game business and a multi-generational family in this case.
Yeah, the Vanderbilts.
Yes.
Eric, it sounds like a fascinating book. We're out of time today, but we appreciate your time, and we hope to see you again soon.
Thank you. Thanks for having me.
Thank you. When we come back this morning, NVIDIA shares are surging, lifting all boats in the chip sector. We'll talk to an analyst right after the break. That stock right now up by 4.8%. And later, Bridgewater founder Ray Dalio will join us right here on the Squawk set. We'll be right back.
In a world of conformity, it's often the innovative that stand out. At FlexJet, we've built a state-of-the-art operations control center with an international fleet of private jets and helicopters. Our Red Label crews are leading the way in pilot compensation, all supported by one of the world's largest maintenance networks. This is our timeless dedication to you. That's why we're outgrowing the competition 2-1. At FlexJet, you won't just be flown, you'll be moved.
CMOs, CEOs, listen up. 81% of commerce happens in the real world, not online. Your 2026 plan needs a real-world strategy. AI is killing your traffic. Big tech owns your audience. You need to turn every touch point into a direct-to-consumer funnel. Scan now for the 2026 big-ass CMO growth plan. Flowcode. Instantly connect fans to your brand.
This is Capital Group and KKR. All systems go.
Capital Group and KKR are expanding access to a world of investing once reserved for a select few. By bringing public and private markets together, we're transforming what's possible for you and your clients. Explore our world of public-private plus funds. Take the first step.
Live ambitiously. Buy the Dip with CNBC Pro's Best Deal of the Year. Market-moving news and interviews across 3 global live streams. Subscriber-only content from Wall Street pros like Josh Brown.
If you love the stock market as much as I do, you're going to love the best stocks in the market list.
Plus exclusive live events.
This is my first time at the stock exchange, and it's been awesome.
To be on the floor, I just can't believe I'm here.
Go pro with the Best Deal of the Year at cnbc.com/Pro Black Friday. Terms and restrictions apply.
The thing about long-term relationships is sometimes you need to spice things up. Look at that. Crispy chicken from Taco Bell, a brand new classic. You're welcome.
Introducing Verts. Swipe for news and highlights. Now available on the ESPN app.
All right, welcome back, everybody. Take a look at shares of NVIDIA. They're up by about 4.7% this morning, more than $8.70. For all of that, watching what's been happening with this, gaining more than 45% just since the start of the year, if you've been keeping track of this. The AI chip maker reporting stronger than expected profits and revenue, and the CEO, Jensen Huang, saying sales of its Blackwell chips are off the charts, in his words. Joining us right now is Chris Casso. He is Wolfe Research senior analyst. And Chris, this blew expectations out of the water. Not just from what you saw on the sell side, but also on the buy side, too. What do you make of these numbers? Does it ease your concerns?
It does. And
order canceled.
The numbers, as you said, are good, not just for the sell side numbers, but the buy side expectation, about $3 billion upside to where the sell side number was. But what was really important was this reiteration of something they talked about back at GTC Washington a couple of weeks ago, which is that they had $500 billion of bookings for the combined Blackwell plus Rubin for 25 plus 26. And then, given what they've guided to for this quarter and just doing the math into next year, that also signals some healthy upside for next year as well, which is, I think that's what the stock is reacting to.
Yeah, I mean, the fear around all of these issues and the fear with the AI sales in general, if you want to call it an AI bubble, if it is one, if it's not, is that those sales, those expected sales will evaporate, that you'll see a pullback from some of the big spenders. How confident are you that these sales are locked in, and if they aren't, for some reason, that other buyers will materialize?
Yeah, so Jensen addressed that yesterday as well. And what he said was, they said they took a different view of this, and really they see this as transformational. But, our view is that what's likely to happen over the next 1 or 2 years, and OpenAI, in our view, has laid down the gauntlet that getting access to capacity is a key advantage for them. And the question is, what is everyone else going to do? It's very hard right now, particularly with agentic AI coming next year, that anybody could sit on the sideline and say, we think we're investing too much right now. So for that reason, we have very high confidence that, yes, this money is going to be spent in 26 and 27. Now, 28, 29, beyond is still a question. It's going to require good monetization of AI, seeing profitability. But certainly for the next 2 years, we have a lot of confidence, and so does NVIDIA.
I want to take a look at the revenue numbers. We checked this out earlier this morning. Right now we're looking at the data center quarterly revenue, but let's look at the overall NVIDIA quarterly revenue over the last 10 or 12 quarters. You'll see that $57.1 billion in revenue this quarter is, the gain that you saw between the previous quarter and the second quarter and the third quarter is more than you would even see on a quarterly basis going back 10 or 11 quarters. That's pretty phenomenal. That's pretty amazing. We kind of forget that story when you start worrying about where things are headed with this. What do you think a fair value for NVIDIA shares are based on what they said yesterday, based on what they reported yesterday?
Right. So our number for next year goes to, our earnings number goes to $8. So that puts the stock at right now just a low 20s multiple, about a 23 multiple or so. So we raised our price target to $250. But I think that addresses one of the concerns also, which is, is this a bubble? And, I was around in 2000 when we had the tech bubble, and we were trading at that point at triple digit valuations. And we're just not right now. And so from a valuation standpoint, given, as you said, where the revenue growth has been, better than 50% a year for a long time, we're looking at really strong growth next year. That, low 20s multiple is certainly not unreasonable for the stock.
So you have a $250 price target on this stock. If you expand your aperture and look at the rest of the ecosystem, how do you feel about some of these other stocks?
Again, under this context that we think that AI, continues to grow through 26, 27, we're pretty constructive. One of the stocks, actually our top pick over the last year has actually been Micron in memory. It's been up a lot because pricing has been up a lot. And in memory, you have always the dynamic of when supply gets tight, pricing goes up, which gives the memory producers leverage. That I think still continues into next year. We also like AMD, and they're a much smaller player in this market. But the big news for AMD, obviously, it happened over the past several months, is they too got a win at OpenAI. And that brings their data center revenue into next year, pretty close to $30 billion. And that's transformational for AMD as well. And that stock also is trading at a low 20s multiple. So, the market is actually discounting the potential that things slow, just growth rate slows in 28, 29 or so. But again, if we have very high conviction in 26, 27, and as that comes through, we think these stocks continue to work.
Yeah, AMD up by about 4.5% this morning as well. I think CoreWeave I saw was up by 8% at least at one point this morning. I don't know if you cover that stock, if that's in your universe.
I don't, but the overall concern is just that: is this money going to wind up being spent? And I think certainly the data and the visibility that NVIDIA has right now is Jensen and NVIDIA and AMD, they have confidence that the money is going to be spent, and ultimately, if that money is spent, the valuations are reasonable enough that these stocks continue to go higher if that money is indeed spent.
Okay, Chris Casso. Chris, thanks a lot.
Thank you.
Okay, coming up, we've got, ready for this? Not a typo. We got the September jobs report. It's going to be released at 8:30 a.m. Eastern time. That report, obviously, a couple months late. But before that, Indeed has a new report about the 2026 labor market. We're going to have that next. And then later, you don't want to miss this. Bridgewater founder Ray Dalio on the markets, the state of the economy, the AI boom, and so much more. That's at 8 a.m. Eastern time this morning. Squawk Box can write that.
Time now for today's Aflac trivia question. What building holds the record as the tallest building in California, as well as the tallest building west of the Mississippi? The answer when Squawk Box returns.
Here's up, Coach. Media's here. Watch me work, baby.
I'm sure they're here to see the commissioner of coverage.
Aflac. Excuse me, Commissioner. When health insurance doesn't cover everything, what's the move? Aflac.
What the commissioner means is that Aflac gives you cash to help with all those medical bills.
We think you're amazing.
They came to see you, huh?
Get help with expenses health insurance doesn't cover with
Aflac.
How do we get Aflac?
Man, they got to ask about it at work.
They are working.
Good morning. You guys want to do the race now before the NFP? Let me get it set up.
We don't play games. What you see is what you get. No hot air, just plans starting at $20. Bet you're glad you wore cargo pants. Because cargo pants.
Give me 1 second, all right?
You can see how we can cut your bill. Plans start at just $20. Call Consumer Cellular.
These are people who are trying to change the world. Startups have this energy that energizes me. I'm thriving by helping others thrive every day. People who know BDO.
The holidays are all about giving, but at the Ram Black Friday sales event, it's all about getting. Get 0% APR financing for 60 months. Get the strongest Ram 1500 ever. And get it all backed by a 10-year, 100,000-mile warranty. Nothing stops Ram. Don't let anything stop you from getting a great deal at the Ram Black Friday sales event.
Right now, purchase this Ram 1500 and get 0% financing for 60 months or $5,500 total cash allowance on select 2026 Ram 1500 models in dealer inventory. And get a 10-year, 100,000-mile powertrain limited warranty.
Overtime's about understanding what just happened in the markets that day and preparing for tomorrow. I'm looking to talk to sophisticated investors, beginning investors. I'm always learning.
Closing bell overtime, weekdays 4 Eastern and streaming on CNBC+. And now the answer to today's Aflac trivia question. What building holds the record as the tallest building in California, as well as the tallest building west of the Mississippi? The answer? The Wilshire Grand Center, which is in downtown Los Angeles.
New reports out this morning from Indeed. It suggests that unemployment is likely to rise in 2026, but job openings should stabilize. Joining us right now with the details of the report is Laura Ulrich. She's Indeed's Director of Economic Research. Good morning to you. Help us understand what you're seeing and what is going to drive the unemployment picture that you're talking about.
Yes, so great to be here this morning. So as you mentioned, our report shows that we're expecting unemployment probably to end up within a range of about 4.1 to 4.8% next year. And we estimate that using the blue chip consensus GDP estimates for next year and then kind of doing our own calculations to estimate job postings and unemployment rate. And really what we're expecting to see is a continuation in much of the macro economy of this low hire environment we've been in. But as we highlight in our report, it's very different if you look, if kind of narrow into different sectors and different geographies across the country.
So, you know, one of the things that we talk about all the time, we've been talking about in video all morning, is the prospect that AI is going to actually generate a lot of this unemployment. That's not your thesis.
No, it's not right now. We don't believe that AI is what's driving. It's not like the dominant player in the market. Some of the uncertainty about AI might be slowing down businesses' decision making, but we don't believe it's the dominant thing that's happening in the market. And part of that is because we do track how many job postings mention AI in any form, and it's still very low. It's still just at 3.2% in our Indeed data.
So if you wanted to move right now to a state where you think you have the best prospect of getting a job, you'd move where? And if you wanted to move from a state where you think you won't have a job, where would you move out of?
Great question. So we talk about this in the report. One of the interesting trends is that the smaller MSAs in almost every state are outpassing the largest MSAs in job postings. And job postings are higher kind of in the Southeast Sunbelt region across the country, and then some in the middle part of the country as well. So if you look at a state like Georgia, it's actually Atlanta that has the lowest job posting index in our Indeed data. It's still well above pre-COVID norms, but it's the lowest of all the MSAs in Georgia. It's actually the smaller MSAs like Macon or Augusta or Athens that have stronger growth, and we see that across the country.
And where is it the biggest problem spot?
Yeah, great question. The biggest problem spots are the large MSAs that are very tech heavy. So if you look in places like Seattle and some of the the Bay Area and some of the other MSAs in California,
you don't connect that back to AI though. The reason I mentioned that, I was looking at that in the report and thinking to myself, well, if it's these big tech heavy oriented cities, and we keep hearing, at least anecdotally, that a lot of these folks don't need the number of engineers that they used to require for programming and the like. Doesn't that explain why they're not posting those jobs?
Some, but actually what we think that much of this also is about the curve that we saw in tech job postings back in 21 and 22. If you look, they had an extremely large boom during that period. And so we do believe that some of what is happening now, that kind of the tech bubble bursting in labor is just as much about that boom in 21, 22 as it is about AI right now. We do see some entry-level job postings in tech declining, but there are senior level jobs, for example, are expanding. So we don't attribute the majority of it to AI right now, even though we do believe AI is having some impact for sure.
How much of it is just that these tech companies are spending so much money on the talent at the very top for AI, they've got to find other places to cut back?
I think that is part of it. And I think also if you look at hiring in general that occurred earlier in the post-pandemic period, much of that was in entry-level developers and analysts. And we can look and see what at the job title level, what jobs are declining the fastest, and they are in those entry-level positions. And we do see growth in those senior roles.
Okay, Laura, I want to thank you. It's a fascinating report. And of course, we'll get another report, maybe not as timely. We'll see the numbers from September in just a little bit.
Plus, we're going to be talking to Senator Mark Warner about some of these very same issues. He and some of his colleagues have some concerns about whether AI really is cutting into job creation, and they've got a bill to try and show some more transparency when it comes to that. We'll get his comments on that coming up in just a little while. A report related to all AI-related jobs. Squawk Box will be right back.
Seabeth, your mom told you to find a job.
Hello?
You made a company instead. To keep your growth going, you needed an advisor built for the middle market. Accounting, advisory, insurance, and more. Seabeth, insights that impact.
Down, up, right, left, inside, out. Sometimes it's hard to make sense from nonsense. Go beyond the headlines. A trusted global perspective. The Economist. Know which way is up.
That guard dog sure is lucky he has SimpliSafe with proactive monitoring.
Stop. This is SimpliSafe. Police are on the way.
Must be nice. SimpliSafe. Real security stops crime before it starts.
Hey, small business owners, pickleball is kind of like bookkeeping and accounting, right? Lots of strategy, lots of effort, and if you don't have the right partner, you just won't win. It's time to team up with a winning partner. Call Zendu, and let's get that win today. Zendu, the official bookkeeper and accountant for small businesses.
It's about political.
American people deserve better fiscal.
It's terrible. Politics seeps into everything.
What do you mean? Talk about climate change or the economy or, of course, elections.
You can't find out what we should really expect to happen.
But of course you can.
Go to IBKR's Forecast Trader. Put your money where your mouth is.
I started the club for you. I don't have a background in business or finance.
I needed further insight. Jim was just a person to give me that.
Join the club with Jim's best deal of the year at cnbc.com/Club Black Friday. Terms and restrictions apply.
Where's the best place to buy kids' furniture? A furniture store just for kids. That's Rooms to Go Kids. And right now during the holiday sale, save even more on stylish beds, bunks, lofts, and room packages too. Like this and this on sale with 55-month interest-free financing. Plus, don't miss our exclusive brands like Disney Princess, Star Wars, and Marvel's Spider-Man. Shop, save, and get fast delivery with expert setup right now at Rooms to Go Kids.
Holidays with you. That's all I wanna do. Holidays with you.
Sure, we all love what's in the box, but not nearly as much as who put it in there. Find everything you need for everyone you love. Bells.
IBM and Cisco announcing a collaboration on networked quantum computers that is targeted for the early 2030s. The companies say that they aim to demonstrate the first proof of concept network within the next 5 years that combines individual quantum computers, enabling them to work together to run computations at unprecedented speeds. They say their collaboration will create a pathway to form a future quantum computing internet by the late 2030s.
Meantime, we do have some deal news I want to tell you about right now. Abbott is buying Exact Science. The price tag, $105 per share, about $21 billion. Exact Sciences is a leader in large and fast-growing cancer screening, precision oncology diagnostics. You can take a look right now at just what's happening here. Exact Sciences, the stock up about 17% on the back of that news. Still a little bit of an arbitrage taking place. We'll see what's going on there.
Exact Sciences. Yeah, Exact Sciences makes Cologuard. That's a non-invasive colorectal cancer screening option. I think that's one of those ones where you poop in a box. It's also got the Oncotype DX that informs personalized treatment decisions for patients with breast cancer. The company is saying, Abbott is, that it expects that to have immediate addition to revenue growth with this and to their gross margins. Still, Abbott Lab shares are down by about 2%, but this was kind of out there and rumored about some of these things, but you do see Exact Sciences up by 17%.
We'll keep our eyes on that transaction. But coming up after this, concerns on Capitol Hill about AI-related job losses. So we were just hinting at earlier. Senator Mark Warner wants to require big companies to report any AI-related job data to the federal government. He's going to talk to us about that new legislation next. Squawk Box coming right back.
At PGIM, our ETFs use today's best ideas to help bring tomorrow's goals within reach. Our broad suite of over 50 low-cost ETFs is backed by 150 years of active management expertise. Explore PGIM ETFs today.
Rather than get rich quick, I believe in get rich slow. The high-yield cash account at Public actually had higher rates than anything else I was able to find online. I don't want to be losing sleep over having made risky investments. I needed something stable that could really give me long-term financial benefits. I know my money's working hard for me, and I know I can access it anytime I need it.
In any business, you ride the line between numbers and people. What's right for the business and what's best for everyone who depends on it. Solving today's challenges while creating future opportunities. It takes balance. CLA, CPAs, consultants, and wealth advisors will get you there.
Agnico Eagle, second largest gold producer in the world, delivering scale, consistency, and superior leverage to gold. That's Agnico Eagle.
CMOs, CEOs, listen up. 81% of commerce happens in the real world, not online. Your 2026 plan needs a real-world strategy. AI is killing your traffic. Big tech owns your audience. You need to turn every touch point into a direct-to-consumer funnel. Scan now for the 2026 big-ass CMO growth plan. Flowcode. Instantly connect fans to your brand.
Alright, we got 1 minute left. I'm gonna start the race, okay?
Welcome back, Everybody, our next guest is sounding the alarm about AI job losses. He recently introduced a bipartisan bill that would require companies and the federal government to report AI-related job data, including losses to the Labor Department. Joining us right now is Senator Mark Warner. He is a Democrat from Virginia. And Senator, welcome. Thank you for joining us today. I know that this is legislation that you're introducing with Josh Hawley, who is a Republican on this. Where does the concern come from? What are you hoping to get at?
Well, the concern is we know AI is going to transform the economy. It's going to eliminate a lot of jobs. It's also going to create some jobs downstream. What we're trying to get at is just some good data. As companies eliminate jobs through AI, they ought to report that. And what I'm particularly concerned about is not so much the elimination, but the fact that entry-level jobs may very quickly disappear. We're already at 9% recent college graduate unemployment. I think that number
Oh, I need to eat my yogurt.
5% very shortly. That will have effect not only on those folks getting out of college without a job directly, but their parents who probably finance that.
You need 10 points to win, okay? So keep chatting.
The AI community and saying, guys, you know, I will buy it that there'll be new AI jobs created, but it may be a 5-year gap. Help us figure out in the interim, and help pay, by the way, in the interim, for how we do this kind of training for jobs that are AI-centric. And I really want to put it to the AI guys to be part of this, but it all starts with data.
That's what I was getting at, this idea that you report it and then do what? But your plan is you are going to charge who for the training on this? The AI guys.
What I'm saying is this. I'm saying we can go down all of the AI entities who will acknowledge, many of them acknowledge this level of job dislocation. They will say, as everybody on the show says, you know, government will screw it up. Well, I'd say, you're right. Well, last time we did a massive job retraining program in the early 90s with Trade Assistance Act, it didn't work. But let's go to the AI community and say, work with us. And frankly, let's put in place this retraining program so that as AI jobs come about, we don't have this level of, particularly coming out of college, job loss. I already know all the big banks are cutting their internship programs. Their hiring's in half. They intend to cut again next year. And my feeling is if we eliminate that front end of the pipeline, how are people ever going to get to that mid-career spot?
Okay,
I think the AI guys.
I agree with you on your concern about what happens to entry-level jobs.
All right, I'm closing it out. We're going to start.
Wrapping it up with this idea that, and we're going to make you pay to retrain. That makes me think you're
1 second.
Instead of going to be shining light on what's happening with this situation, you are only going to encourage companies to be less honest and less open about what's happening when the answer is you're going to pay, we're going to tax you, we're going to come at you to make sure we fix this.
No. What I would say is this. You got to start with good data. We don't have any of that data right now. 2, if you go to 25% recent college graduate unemployment levels, this will be the dominant political issue in 26 and 28. I think, and government's response ought to be, how do we actually work with the AI community and say, you know, you guys help us figure out what that job training, retraining program looks like. You know, we clearly, if we go way back in time, 3 years ago, and we thought, well, at least everybody ought to be a coder. That didn't end up being the right thing. I really want to get engaged with the AI community, and I've been talking to, we all know the names, I've been talking to a lot of them, how we could design something that would get us through this transition. I accept the fact there may be AI jobs coming down the line, but there's going to be this gap, and I think the AI community ought to have some responsibility on helping us figure this out.
Senator, I think the question that Becky's got into in a very good way is, it would be one thing if you said, look, we just need to understand the data and we need everybody to report. And then there's a question of how everyone's going to report, what that's going to look like, who's actually going to track all of this and that and the like. And then there is this question, which Becky went straight to, which you've gone to, which is what is that data effectively get used for? If people ultimately think it's being used for a tax, that's going to be a real quandary. And I'm not suggesting it shouldn't.
All right, you guys ready? Good luck. It's Christmas every day with Uncle. Yeah, make sure you have 10 points, okay? Yeah, you need 10 points to win, sorry. 10 points is easy if you watch the stream every day. Takes like 1 day to get 10 points. Alright, 15 seconds, boys. Oh, who is it? I hope you have 10 points. Hey JC, can you type points? Congrats if you have 10 points. Oh, we gotta see if you have 10 points or not. Or the JCSC2490. Oh, I might be an alt account. Yeah, I don't see any points for him. Yeah, I don't see it. JCSC2490. Yeah, he doesn't have 10. It's an alt account. He has 0 points. I'm waiting for him to reply back, so give him some time. I don't see any points in here. Are you there? Oh shit, he does have points. Wait, no, that's... Yeah, he does. Oh, he does, my bad. Yeah, he got 31 points. Can you, let me know your Twitter so I can get your info? Yeah. Congrats, man.
And I think that's a big deal, and I think we ought to, not pull our hair out at the end. But
Yeah.
actually,
Oh, that's your Twitter? Alright, I'll send you a DM and get your information. Congrats, man.
and say, how do we make that recent finance grad or even more English grad able to be actually competitive in an AI-driven economy?
Senator, we have to go, but I do have to ask you about the president's executive order overnight saying that he is going to instruct the Justice Department to go after states that are creating their own rules for AI because he thinks it interferes with interstate commerce. Do you agree?
I don't agree. I do think we ought to have a single...
I sent you a DM on Twitter. Congrats, man.
But if we take away the pressure from the states, Congress will never act. Let's look at the fact we never did anything on social media. If we make that same response on AI and don't put guardrails, I think we'll come to rue that day.
Senator, thank you.
Okay, we got a lot more news for you. We got some news just coming in right now from Verizon this morning. The company's CEO, Dan Schulman, sending a letter to...
Hell yeah, get your payout, man.
Talking about jobs here. Today, he says, quote, we will begin reducing our workforce by more than 13,000 employees across the organization and significantly reduce our outsourced and other outside labor expenses. The actions we're taking are designed to make us faster and more focused, positioning our company to deliver for our customers while continuing to capture new growth opportunities. The company is setting aside $20 million for a reskilling and career transition fund for employees who are laid off. There were reports late last week that Verizon was planning to cut as many as 15,000 jobs. You're looking at that stock off just marginally, but I don't think that it's had an opportunity to really move one way or the other, and maybe the expectation was that something like this was coming with Dan Schulman coming in.
Yeah, market's pushing up, but maybe the data would dump it, but I don't know.
A month from now, assuming we get a jobs report a month from now, this may be in there. Coming up, the CEO of UBS pushing back on a report that said the bank is considering leaving Switzerland. Joe and I had discussed.
I'm glad you guys are getting payout with the freebies. That's really good. Good shit, man.
The state of the economy, the AI boom, and much more. That's coming up in the 8 a.m. hour. You do not want to miss that conversation.
Order filled. Order submitted.
Paige, in the flesh. Rookie of the year. Hope you win it again next year.
They only give us rookies.
Santa believes in you. Jingle Jam. Swish Miss came early this year.
Safe like repair, safe like replace.
Sometimes things fall right into place, but other times they just fall.
No.
What was that?
But at least you can get it fixed now and pay later in 4 interest-free payments at SafeLight.com.
Awesome.
And SafeLight can come to you for free, anytime, anywhere, and do everything you need to get back on the road.
All set. Here you go.
Thank you.
Take care. Get it fixed now and pay later at SafeLight.com.
Safe like repair, safe like replace.
Every morning, even before the markets open, I'm planning my moves that I make throughout the day. When you're actively trading, the fees really start to add up, and that eats directly into your potential returns. I found that Public is really the only platform that offers rebates on your option trades, which help offset those costs. For me, when it comes to investing, timing is everything, and Public allows me to get a step ahead.
Gold. It has always been the core of what we do. We are I Am Gold. Innovative. Accountable. Mining. We are mining.
Oh, bot just went long. Don't follow the bot. You got CPI coming up. Not CPI, NFP.
Educator, game changer. She needs her money to work as hard as she does. That's why she uses U.S. Bank Smartly checking and savings, which does exactly that, helping her track her spending and grow her money. Together, we'll achieve more than any of us could alone. You got this, Jess.
We got this.
That's the power of Jess, and this is the power of us.
Go right now to the Rooms to Go Holiday Mattress Sale. Do not miss this very special offer. Buy this therapeutic, Sealy Correct Comfort.
Yeah, the race is already done. Sorry.
Your choice of sizes for just $5.95.
I want to get it done before the YOLO.
Any size, one low price. Twin, full, queen, even a king size mattress, only $5.95. Plus, check out all our other great mattress buys at the Rooms to Go Holiday Mattress Sale, going on now.
That was close.
Aldi just saved the holiday spirit. I'm okay. Shop Aldi first and save. It's an Aldi thing.
Morning.
That's hilarious. Yeah, should we buy it?
Yeah, this is for you.
Gifts that say I get you. Etsy.
UBS's CEO, Sergio Amrati, pushing back on reports that the bank is considering leaving Switzerland. He was speaking at a JP Morgan conference overnight. He said that UBS, being a Swiss bank, is the best possible outcome, and that he and Chairman Colm Kelleher are working on that. He said the rest is BS, not UBS, and they never, ever threatened to leave the country. There was a Bloomberg report, which we mentioned on the broadcast earlier this week, that said that UBS's chair, Kelleher, held talks with Treasury Secretary Scott Bessent about potentially moving the bank's headquarters to the U.S. as it deals with higher proposed capital requirements in Switzerland. And that raised a lot of eyebrows given the shotgun marriage between UBS and Credit Suisse and just the role that UBS has inside of Switzerland. Meantime, when we come back, the promise of $1 trillion in investment. We're going to talk to a former U.S. ambassador to Saudi Arabia about Saudi Crown Prince Mohammed bin Salman's visit and the ties to corporate America. And then at the top of the hour, Bridgewater founder Ray Dalio in a wide-ranging interview. We're going to talk to him about everything. His thoughts on potential AI bubbles, the markets, debt cycles, and so much more. Don't go anywhere.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
In a world of conformity, it's often the innovative that stand out. At FlexJet, we've built a state-of-the-art operations control center with an international fleet of private jets and helicopters. Our Red Label crews are leading the way in pilot compensation, all supported by one of the world's largest maintenance networks. This is our timeless dedication to you. That's why we're outgrowing the competition 2-1. At FlexJet, you won't just be flown, you'll be moved.
At Allegiance, we're a leading provider of engineering, installation, and maintenance. We focus on technically complex buildings like data centers and healthcare and semiconductors and higher education.
I could not be more proud that we're here today. The future begins now.
Oh, so you corporate types think you're rock stars?
That's as ridiculous as us, being corporate types. Let's begin.
Rockstar move using Workday to handle all our AI agents.
Well, watch me handle my agent, Gary. Bubbly water, no bubbles. So what'd you do this weekend?
The huge.
Shout out to Carmen for using Workday to manage our people and AI agents.
What are we doing?
Just clap.
Everyone loves to find surprising presents under the tree.
Love him.
And WeatherTech gifts are always special too. Vehicles are protected with laser measured floor liners for the front and middle, plus a cargo liner for the rear, and seat protector for furry messes. And with the pet feeding system, he'll eat safely his entire life. Add a cup phone to make sure the phone is secure while driving. Find these American-made gifts or get a gift card instantly at WT.com.
Buy the dip with Pro's best deal of the year, including exclusive access to Pro Live events.
This is my first time at the stock exchange, and it's been awesome.
Go Pro at cnbc.com/Pro Black Friday. Terms and restrictions apply.
Fox, Saudi Crown Prince Mohammed bin Salman continued his tour of D.C. yesterday, meeting with leaders in business and on Capitol Hill. The White House saying the kingdom has now pledged $1 trillion in U.S. investments. Joining us right now is Robert Jordan. He's the former U.S. ambassador to Saudi Arabia in the George W. Bush administration. He's the author of
setting up my YOLO.
Saudi Arabia following 9/11. Ambassador, good morning to you. We've all been watching MBS here in the United States as this has all played out. And I'm so curious how you think the relationship is shifting. There's also an interesting piece in the New York Times this morning about the shifting economics of Saudi Arabia itself, insofar as that there may not be as much cash on hand to be investing the way it has been over the past.
It's a YOLO. I just go short and long. Short one account, long in another account. So it should be 50-50 if I pass, but if it's chop, blow.
Economic that right now is quite substantial. They have planned this Vision 2030 program in a way that is really unachievable as it was originally announced. They have pulled back quite a bit from what they've been doing. They've gone into debt to some degree. I think they've got 35, 38% debt to GDP right now, which is not terribly high compared to historical norms, but it's still noteworthy that it's increasing. I think they may well have bit off more than they can chew in terms of the supposed $1 trillion worth of investments. And I think they're very desperate for foreign direct investment. They have to have foreign currency. They have to have foreign participation in all of these mega projects that they're proposing.
So let's think that through. So first of all, that announcement about the $1 trillion of investment, I said to Joe just the other day, $1 trillion, that is the country's GDP practically. So is that a real investment? I mean, how should we even think about that? And obviously it would be over years, but are we talking about 10 years? Are we talking about 5 years? Are we talking about 30 years?
That's exactly the question, and we don't know. These are all still very amorphous kinds of promises and investments. They haven't been worked out. They haven't been negotiated. And so it's not as if this was some sort of Saudi Black Friday where they're coming in and buying all of these things up front. This is a back-end loaded process, is my guess.
Do you think then we are making the right call, the wrong call, to engage with Saudi the way we are? I mean, obviously we're selling them F-35 fighter jets and, all sorts of investment. So much of Wall Street today, to a large degree, has become dependent on Saudi and PIF, the Sovereign Wealth Fund.
I think it's something that bears a lot of scrutiny. I wouldn't say we shouldn't be doing this because massive trade relationships are generally very helpful. But so much of what was intended here, I think, was to have an equilibrium where the United States received more concrete benefits, such as the Saudis joining the Abraham Accords, which, of course, is off the table for the moment. But I think Trump has maybe given up a certain amount of leverage with the Saudis on the Abraham Accords and on assistance in Gaza, on assistance in Lebanon, and so forth, in order to have these grandiose announcements. So I think we've got to have a certain degree of skepticism about them.
So given the skepticism that you have, if we had this conversation together in a couple years from now, 4 or 5 years, let's just say, what do you think we'll be thinking about these deals, the announcements of them, and what will we think about the economy that is Saudi Arabia?
Well, they're clearly diversifying their economy. I was there a few months ago and was shocked to run into people setting up the WWE wrestling tournament. So they've got a focus on entertainment. They've got a focus on a much more diverse approach to their population. All of that is generally positive. But I think we've got to think further ahead. And if we are so dependent,
yeah, 30 minutes into YOLO. Looks like NQ is going up. Maybe I'll jump for the data.
Order canceled.
Get some YOLO in.
Us in a similar position to the one we were in, being dependent on.
Order submitted.
You can be dependent on AI. You can be dependent on data centers. That's a supply chain and a relationship risk that I think is out there that someone needs to pay some attention to.
Okay, Ambassador, I want to thank you. It's an important issue, and I imagine it's part of the conversation that we're going to continue to be having. Thank you again.
All right, thanks, Andrew.
It is just after 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Andrew Ross Sorkin. Joe is off today. Check out the futures. They are sharply higher. Dow futures now up by over 300 points. You've got the S&P futures up by 88. The NASDAQ indicated up by almost 450 points, and you can thank NVIDIA for all of this. NVIDIA giving the markets a big boost this morning after it eased some concerns about an AI bubble last night. Jensen Huang saying he sees it differently on the analyst call. Not just that, but if you look at the numbers they reported, much stronger than expected earnings per share, revenue that came in more than $2 billion ahead of what the street had been anticipating. Talking about what they see for the current quarter, also much above what the street had anticipated. We'll have much more on that in just a bit, but that stock up by close to 4.9%. You are talking about probably more than $225 billion in market cap being added to NVIDIA this morning. The other big story this morning, data. We'll get the delayed September jobs report and weekly jobless claims for the week of November 15. Both of those numbers coming at 8:30 a.m. Eastern Time this morning.
Okay, now to our newsmaker of the morning. He is here joining us to discuss the markets, the history of economic bubbles, artificial intelligence, so much more. Bridgewater founder Ray Dalio is with us. Good morning to you, sir.
Good morning.
So you've been providing lessons for us for a very long time about economic cycles and where we are and what's going on. The big question in the market right now, because we're looking at NVIDIA this morning, and I think a lot of people are waking up thinking, where's the market headed next, has been this question of an AI bubble. And I'm curious where you ultimately come down. Are you with Jensen Huang, who says he doesn't see it that way, or do you see something else?
There's definitely a bubble in markets. Yeah, bubbles, what is a bubble, right?
Okay, what is a bubble?
What is a bubble? A bubble is that there's a lot of creation of wealth from various ways, such as you decide that you're going to have sell $50 billion worth of stock and value it at $1 trillion, or you have multiples like that, and then you create the wealth that way. And then the question with all this wealth relative to money is who needs the money. So it's a matter of who the buyers and sellers are. For example, if we had a wealth tax, or if you had a tightening of monetary policy, then there has to be the selling of those assets. So in order to pay those things. So there's a mechanics of who owns it, is it over-owned, and so on. It's not the long-term duration of the earnings. So you think about it, isn't it interesting that we have such a short-term reaction? It's great that what the results are, but this is it's valued as a long-duration asset. So for 25 years, the next 25 years, it's very unknown. We don't know what's going to happen, and bubbles don't happen because of good estimates of what in the future. It happens because of the need for cash. Do you sell that asset? Do you have to sell that asset for cash for some reason?
Well, that's the question, though.
So your book, I thought, did such a good example. I mean, I thought, by the way, your book is fabulous.
Thank you.
But you take the 1929, and then you say, what made it go up and what made it go down? And that dynamic is the way bubbles work, right? And so if you take who has exposures, how much leverage is used, and so on, this is about 80% into a bubble that was 100% would have been 1929 and 2000.
So how much leverage do you think is supporting all of this? Because we were talking to Partsinevelis in the last hour, and she was explaining this idea that Jensen Huang doesn't see a lot of the transactions that he's been doing. We were talking about these circular transactions where he's effectively taking an equity stake in some business, and that business is then committing to buy his chips, if you will.
Yeah.
A form of vendor financing with sort of a equity overlay, maybe, is the way to think about it. Do you look at that and say that's a problem? It's not a problem? Should we think about vendor financing in a different way? That was something that got a lot of the fiber guys in trouble in the late 90s, for example.
Yeah, I think it's an issue, but I don't think it's the main issue. I think the real issue is who owns the stock.
Okay.
Is it in strong hands? Not just one stock.
Right.
Isn't it amazing we're talking about one stock for the stock market bubble, and we're talking about for the economy bubble. So you have such a small percentage of the economy, such a small percentage of the American population in terms of wealth and so on, concentrated, and everybody in it, and in a leveraged way. In various ways, it has leverage.
What are strong hands? Like, how would you define that?
Weak hands would be the public.
So retail investors are weak hands.
Right.
Strong hands are the owners of these companies.
Right. In other words, strong hands is that they primarily invest their own money. You don't have public, right? The weak hands is largely, let's say, a leveraged public. And all united about that. That's one of the key ingredients of a bubble.
Right.
So it's not just pricing, because we have to find out. You know, your book did such a great job of looking at the wonderful companies in the 1920s, and then it enumerated how electricity came out, and General Electric, and RCA, and so on. And those companies went down 90%, not because of the economy and so on, The bubble burst first because they needed cash. So you have to understand that wealth can't be spent. In order to get money, you have to sell wealth in order to get cash to get the money to buy things. And so when that happens, bubbles burst. So bubble bursting means, let's say, a tightening of monetary policy is classic, but also something like wealth taxes can happen. For example, think about wealth taxes forcing sales of assets that you have to.
And you're right, by the way, there's a proposal for a wealth tax in California right now.
Yeah, so state and national, right? State and national. I'm just trying to describe the mechanics of a bubble.
But you said we're at 80%.
Well, yes, I have a bubble indicator that goes back to 1900, and it just makes has a number of indicators. How much leveraging? Who has the leveraging? Is it what is the amount of money in wealth that relative to the amount of cash that needs to exist, and so on? These indicators, there are a number of them, show that we're on that chart. If I was to show you the chart, it's about 80% of where it was in those two times. That doesn't mean that that's the end of the move, okay? Because bubbles have to be pricked.
Right.
And so you can measure that there's vulnerability, a lot of vulnerability. There's a lot of vulnerability of who's holding what.
Here's my question to you about that, which is if the bubble is at this 80% range on your index or metric, there are folks, we had Paul Tudor Jones come in here a couple weeks ago, and he said, look, I think we're in October of 1999. By the way, the market would still have 40% to go. Back in 1928, Charles Merrill, who founded Merrill Lynch, told everybody, get out of the market because he thought it was a bubble. And he was right and he was wrong insofar as from the beginning of 1928 to September of 1929, stock market went up 90%. And so...
But I think that when you're looking at that, you're looking at it incorrectly, okay? What is a bubble is the definition, right? I want to reiterate, a lot can go up before the bubble bursts. A bubble is an unsustained set of circumstances. It has unsustained amount of buying. It has an unsustained amount of valuation. It has, and then there's something that pricks the bubble.
Is there a way to sustain this, though?
You can't look at, don't sell just because there's a bubble. Okay? Don't sell just because of a bubble. But if you look at the correlations with the next 10 years' returns, when you are in that territory, you get very low returns.
By the way, JP Morgan just did a report on this that showed that if you got in at over a 23 PE multiple, typically over a 10-year period, your return is a delta between 2% and minus 2% a year over 10 years.
Yeah.
Which gets to your point.
I just put out today a post on this, and you'll see the charts and if you go on that. So I think that you have to say it's unsustainable. Then you have to go to the timing. What is it that pricks the bubble, right? Typically a tightening of monetary policy. We're not going to have that now, right? But you could have something. In other words, the need for cash.
Right.
The need for cash is always that which pricks the bubble. Because when you have wealth, you can't spend wealth.
Right.
You have to sell wealth in order to get the money to buy the things you need or pay the bills you have. That's the dumb. So I think that the picture is pretty clear in that we are in that territory of a bubble. We are in that bubble territory, but we don't have the pricking of the bubble yet.
Right. So what does a Ray Dalio, what does the Dalio family do with its money at a point in this bubble of 80%, and you still think it can go higher, but this now becomes a game of timing, which is always very difficult.
Oh, of course it's a game of timing. Well, and elements of diversification, you know. I think you start off with what is a well-balanced, diversified portfolio. And we talk about certain things like gold as being part of that. There's a lot of ways to diversify. That's a whole other conversation of what you don't know. But I mean, I think that's that mix. We could talk about gold. We could talk about these other assets. But I think that that kind of diversification.
What about cash?
I think that, yes, gold and cash have negatively correlated real returns. So when you take, I believe that we have a debt problem. Okay, because we have a debt problem, we have a value of money problem. But that's right. If you just said, if I held cash, but cash can also be gold. I mean, I think we have to realize that money is, what is money? There's fiat money, and then there's, gold is the second largest reserve currency. It's money. So when it diversifies the portfolio, that is, I think, an important element. It's negatively correlated. It does very well in such bubbles. So when you think of cash, I think of cash as being a mixture of those two things.
But you don't love the U.S. dollar, is what you're saying, because you think we have
I don't like debt. I think debt assets we have a problem. They're overheld, and we're producing too much. The supply and demand is a problem. And so if I was to take my, what is the tactical view, I would rather be short debt in a sense. Okay, and then that means that what money do we have? I think a big question of our time is what money? What is money? What is a storehold of wealth? That's a big question too. There are these two big questions happening simultaneously. There is the AI question, and then there's the debt question.
We're going to slip in a quick break, and when we come back, we can talk about what is money. We can also talk a little bit about Bitcoin, and I want to talk about debt and private credit and how you think about where the debt and leverage lies in our economy, because there's a lot of it. We're going to come back with Ray Dalio in just a moment, right after this.
Goldman Sachs Active ETFs, designed to deliver outcomes. Driven by more than 150 years of rigor. Not just active, relentless.
I like things personalized, like my coffee. So when my doctor prescribed Vyvgart Hytrulo self-injection for my generalized myasthenia gravis, we personalized my treatment goals.
Vyvgart Hytrulo can improve daily abilities and reduce muscle weakness.
It's my treatment, my way.
Vyvgart Hytrulo for Weekend Away Steve.
It's travel ready and can go where I go.
Self-injection fits my plans. Do not use Vyvgart Hytrulo if you're allergic to its ingredients. It may increase infection risk and cause serious allergic or infusion or injection-related reactions. Tell your doctor if you have an infection, fever, recent or planned vaccinations, allergy history, or kidney problems. Most common side effects include respiratory and urinary tract infections, headache, and injection site reactions.
My Vyvgart Hytrulo self-injection.
Reducing my symptoms.
That's treatment my way.
Ask your neurologist about Vyvgart Hytrulo.
Franklin Templeton ETFs. With over 70 ETFs, we have solutions for every market, helping advisors build the portfolios of the future today. Franklin Templeton, your trusted partner for what's ahead.
Weeknights.
Sell-offs like this can be bought, but only if you have cash and you upgrade out of the morass of ultra-high-risk speculative stocks.
Mad Money, weeknight 6 Eastern and streaming on CNBC+.
What can I get you today?
I don't know. Why is it so hard to find a job where I can help people?
I always wanted a job where I can travel more.
I want a job building rockets.
Okay.
A job that uses my people skills. And a cheeseburger. I'm a creative person. I want to work somewhere creative.
Processed? Yeah, we have a process. We hand select, hand trim, hand spice, hand taste, then we cook out the water the other guys make you pay for, so we can leave in more of the flavor you love. We've got the largest lineup of uncured hams in the business. And when Uncle Frank cut back on salt, we made low and reduced sodium deli favorites, because life without hoagies is not an option. That's what family does, and that's why we do it for yours. Dietz & Watson, it's a family thing since 1939.
I want to get back to our special guest. Bridgewater founder Ray Dalio is with us. Want to touch on Bitcoin, want to touch on private credit, want to touch on this deal economy that we're living in right now and where all of this lies in the context of the bubble or the 80% bubble you think we're living in. Let's go back to the leverage for just one moment, because we were talking about that a lot during this broadcast in the last couple of weeks about private credit and the like. Where is the leverage that we should be worried about, if we should be at all? Do you worry about private credit and how connected that is to the banking system or not?
I think we have a challenge in private markets. If you're looking at the private equity markets,
okay,
they have a bunch of problems. In other words, can't sell deals, pricing of deals, returns, and so on, can't get cash out of them. And then if also you're looking at venture, venture is having problems. And a lot of private credit is connected to private markets.
Right.
Okay. And I think that that dynamic is a risky dynamic in terms of there. But the government credit is what I'm most worried about. In other words, the devaluation, the supply and demand of that over the next 3 years, I'm deeply concerned about that. So debt, and it's increasing because there needs to be more borrowing. I mean, you're seeing the hot companies now borrow money rather than raising
And your worry is just about inflation and the value of the dollar, and therefore you hedge it through gold. We haven't talked about Bitcoin. Is that how you think about it, or are you thinking about something else?
I think debt is money and money is debt. What I mean, debt is money. When you're holding a debt instrument, you're getting a promise to get money, and the value of that money makes the value of that debt. And the same is true. You hold money, what you're holding it in is a debt instrument. And so what we have is too much debt, and particularly, let's say, the government debt, but other than the government debt, we're now creating the private credit. And you're also creating vehicles that are leveraging vehicles. In other words, 5 times an ETF that's 5 times the volatility of something else. That's the dynamic that I concern myself with. So that means then, what is the money? What is the storehold of wealth? Okay, in terms of that type of security.
Would you buy Bitcoin?
So there's a supply demand. I have a small percentage of Bitcoin I've had for forever.
Order
like
filled.
1% of my portfolio.
But do you think you should have more? We keep watching.
But I think I've said the same thing over and over again about Bitcoin. I think the problem of Bitcoin is it's not going to be a reserve currency for major countries, because it can be tracked and it could be conceivably, with quantum computing, controlled, hacked, and so on and so forth. The advantage of gold is that it's an asset that you can hold, and you're not dependent on somebody to provide it. That's why it's the most popular, not fiat currency. I do think that we think the problem is a debt problem. I mean, particularly a government debt problem. And that's not true just of the U.S. We're paying too much attention to the U.S. If you look at what's happening in the U.K., if you look at what's happening in France, number of countries, they can't issue more debt. They're at a limit because the market won't have that. But they can't raise taxes because people leave when they raise the taxes, and it hurts asset prices and so on. And then they can't cut spending. So what do? When you can't borrow and you're running big deficits and you can't do any of those. So you have these political changes that keep taking place. Each of those countries had 4 prime ministers the last 5 years. So I think that as we have these also large wealth gap issues, which means that there are billionaires, and then there are the, let's say, the top 10%, the minus 60%, the lower 60%. Then there's talk of wealth taxes. There's that issue that starts to enter this. There's not enough money around.
Where do you think the money is? We were actually just having a conversation with the ambassador, with a former ambassador to Saudi Arabia, and MBS is here in the U.S. We've always looked at Saudi as this place that has all of this money, especially as they're trying to diversify their economy, and yet there's now a whole bunch of news stories and the like where people are saying maybe they're going to be challenged too.
Well, they're a new borrower, right? They have projects they want to spend.
Right.
Okay. All these countries are new borrowers. So there's a lot of supply of debt, right? What are we going to think about the debt? Put yourself in those cycles. We have a political cycle. You know, there are these 5 big forces I keep talking about, right? The 5 big forces are this debt, money, economy force. There's a political left, right, wealth gap differences that is very relevant to taxes and what that'll mean for the economy. There's a geopolitical force. Okay, then there's acts of nature, and then there's technology. These are the 5 big forces. But when there's these interactions, so you can't separate the political from the financial that we're talking about, right? So as we go ahead, let's say, for example, I think as we look ahead, it's like it's high risk that the Democrats will take the House. Okay, so now we're going to come into another kind of situation in terms of the political conflict is going to be very different. And that's happening at the same time as there are these imbalances. And so we must agree that there's this dynamic that's going on. Your book was so good in really vividly painting the picture. But if you look at that picture and just think about it as what are the mechanics? What caused the bubble? How did the markets go up? How did they go down? What was it? What financed it? And what caused it to go down? I've looked at 35 cases of those like this. They all happen in the same way. So it's that dynamic. It's a confluence of a certain amount of debt that is existing, and we know where it lies. And then there's the issue of the need to convert wealth into spending.
It's too much wealth and not enough money is basically
That's right.
what happens. So the wealth just disappears and goes to wealth heaven. It never gets transferred into being money.
Yes, and if we look back to the Bible and the Old Testament, and you look all of this, or you look back to banking, it's a lot of people walking around with claims on money. Okay, when the two claims on money become too great relative to the quantity of money, that's wealth relative to money, then you believe, everybody who holds wealth believes that they can sell that money, that wealth, and get money and spend it. Right. Oh yeah? Try it. So it's like, it's that dynamic.
But here's the thing that I'm concerned about, which is you talked about trying to diversify your holdings, but in every major moment that the markets have been quote unquote punctured and the bubble, it's hit everything almost across the board, and sometimes violently.
Well, again, I would say it depends on what it is. I've done very well. Bridgewater's done very well in 2008 financial crisis and so on. Made a lot of money. Okay, there's always the best asset to hold during those times. But if you really
the best asset to hold is during that time.
It's a combination of bonds and gold.
Bonds and gold. Okay.
Right, because one way or another, real interest rates have to go down. And so, for example, inflation index bonds, the real interest rates goes down. They go up. And the gold happens because they have to monetize. Right. So if you look at those correlations and take those spikes, those are the things to have. So, but even if you
4 minutes, boys.
Just to have balance in the portfolio.
I got 4 count. Too long, too short.
Ray Dalio, we want to thank you for being here. It was a fantastic conversation. Learned a lot.
Thank you.
Thank you.
All right, still to come this morning, we have data. First time we've said that in a very long time. That delayed September employment report and the jobless claims for the week of November 15th will be out in just a few minutes. First, though, a quick stock to watch. Bath & Body Works down double digits after missing expectations and forecasting lower sales for the fourth quarter. That stock is off by 17.5% this morning. Squawk Box will be right back.
He sure knows these parts well.
Folks say the planes whisper to him.
Outlaws in 500 feet. Rerouting.
Making it up!
Innovation changes everything.
Man, he's good.
With one investment, you can access the NASDAQ 100 innovators who are rethinking the world. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
CIDP is no walk in the park.
That's true.
But I take Vyvgart Hytrulo self-injection.
Same. It's the first major innovation in CIDP treatment in over 30 years.
And while I still have
2 minutes, boys. We got this.
Live vividly. Vyvgart Hytrulo has been proven to significantly reduce the risk of symptoms getting worse.
and I can treat my CIDP with a once-weekly
Make
injection.
sure it's Apex and not the PA.
It may increase infection risk and cause serious allergic or infusion or injection-related reactions. Tell your doctor if you have an infection, fever, recent or planned vaccinations, allergy history, or kidney problems. The most common side effects include
I'm so nervous.
tract infections, headache, and injection site reactions.
I'm hitting fairways.
It's been so long.
I'm hitting the road with my number one. That's how we live vividly with Vidgard Hytrulo.
Ask your neurologist.
Can't really YOLO with one account, but if you're doing the bracket orders, it might work.
Hey, Josh, it's Christmas, man. What are you gifted? Gifted.
Where are your pants?
You're holding gold long for NFP. It might not move, so you should be okay.
And his Tommy John underwear glides
YouTube.
downstairs with last-minute gifts to show that he cares. Stuck for
All right,
ideas,
boys, 1 minute.
where to start?
Go.
Go to TommyJohn.com and
Gift from the heart.
No, it's NFP.
What do you say
If I blow
when a
off
Jewish
4, I'm
woman
going
is
MIA.
kicked on a New York City sidewalk? What do you say when a Holocaust survivor is firebombed on the streets of Colorado? What do you say when 1 in 3 Jewish Americans were victims of hate last year? When there are no words, there's still a symbol to show you care. Share the blue square and stand up to Jewish hate.
CNBC. Live ambitiously.
I always wanted to teach money management. And that's
All right,
why we
30
created
seconds.
this club.
I can't do this by myself anymore. I don't have a background in business or finance.
I realized that the stock market is a rough
I'm
place.
so
and I needed
nervous.
Further insight. I could tell Jim was just a person to give me that. You're not
Order filled. Order filled.
What better
Order
tool would there
filled.
be than
Order filled.
All right, good luck, boys.
Mr. Kramer?
Join the club with
It better move. It better not chop.
CNBC.com/Club Black Friday.
Come
Terms
on.
and restrictions apply.
Order canceled. Order filled.
I think I passed.
Just seconds away
Yep.
from that delayed
4
jobs
pass, 2
number.
pass, 2
We're
fell.
watching the futures this morning. They're up sharply ahead of
Let's
that
go.
we heard from Nvidia last night. Dow futures up by about 250 points. S&P futures up by over 80. The Nasdaq now indicated up by
That's
about
pretty
5 points,
choppy too.
425 points.
Good thing it's 50K. If it's like 300K, you won't pass.
Seen higher yields. The 10-year sitting right at 415. The 2-year at 361 ahead of all of this. Rick Santelli is
Yeah, it's hard just to YOLO one account. It's just chop.
But still, it's data, and we will take what we can get, right?
It's okay.
Yes, and there's gaps. From the last data point to today's data point, there's lots of weeks missing in claims. There's months missing in all the other data points. And here we go. This is the September jobs report. Non-farm payrolls are up a robust 119,000.
Order submitted.
119,000 would be the best since April when we were up 158,000. In the rearview mirror, well, last month was downgraded from 22,000 to minus 4,000. Now, if we look at what's going on with the unemployment rate, it ticked up from 4.3 to 4.4. That was unexpected. 4.4 would, last time we were at that level, boy, I have to go back a ways. October of 2021 when it was 4.5%. Now, if we look at labor force participation rate, it ticked up. That's a good thing. 62.4 equals where we were in May. You have to go to April of this year when it was 62.6 to find a higher number. In terms of the average hourly earnings month over month.
Order submitted. Order
On the
filled.
weak side, we're expecting up 0.3.
Ooh, what a pump.
Where we were in June. To find a lower number, you are going in the way back machine to August of 23 when it was up 1/10. Take a year-over-year perspective. This gets
Order
better.
filled.
From 3.7, our last look
Order
at
filled.
expectation, to 3.8. 3.8 will be the best since July when it was 3.9.
We're up 2%. I think we'll drop again at open.
The year is 3.9, and we've had 4 months of that. The first 3 of the year were 3.9%. If we look at the hours worked, and this is always important, it remains at 34.2.
Order
to
submitted.
find a lower number, you're going to January when it was
Order filled.
34.1. And finally, we get U6,
Order
the
submitted.
underemployment rate. It was 8.1 our last look. It comes in at 8%. 8% would equal where we were
Order
in
canceled.
February to find
Order
a higher number.
filled.
You're going all the way back to October of 2021.
Order submitted.
Now, we have initial jobless claims. This is for the week of November 15th.
Order
As
submitted.
I said, there's weeks missing. We're expecting 227,000. Comes in at 220,000. These numbers
Order
do
submitted.
not reflect nervousness in the labor market. They've been very well behaved. 220,000 would be the lowest level of claims since mid-July. And finally, on continuing claims, it ramped up just a bit, 1,974,000, and that would be the highest level since November of 2021. We see that interest rates had gyrated a bit, but after the dust settles, they're coming in at 411, which is a bit lower than the 414-ish we were hovering at. The pre-opening equities certainly don't mind these numbers. They're moving higher. We're up 371 in Dow futures. And what I find interesting is these numbers are pretty good. They're not off the charts good. They're pretty good. The unemployment rate ticking up, though, that may fuel percentages and probabilities for that ease. However, it may not be appropriate to ease considering the puzzle pieces missing. Those are the words of the Federal Reserve with respect to yesterday's guidelines and the minutes to the last meeting. Back to the gang, and I don't know, it certainly seems as though the market is really holding up well in equities between NVIDIA and what's going on in this report.
That is for sure. Rick, thank you. Stay with us. We were going to bring in some more voices on this, too. Mike Santoli is going to join us with market reaction. But first, we want to get to Steve Leisman. He's got more on these numbers. Steve, good morning.
Yeah, I'll put it in the context that I see it in, Becky, which is that this report really bolsters the case of the hawks on the FOMC, who have said they do not see serious deterioration in the labor market. I'll put an asterisk next to that because I haven't had a chance, pardon me, to dig in to the household survey and that tick up in an unemployment rate. The BLS characterizing that tick up as not statistically significant, just a tenth, and I'm not sure what it rounded out to in the last month. But let me give you some data here, which is a robust report, 119,000, and a little more context here, which is given what's happened to immigration and the labor force, a lot of Fed banks are saying that maybe you need between 30 and 50,000 to keep the unemployment rate stable. Private sector did well, up 97,000, but a big chunk of that was healthcare, up 57,000. Another chunk of that, we've been here before, leisure and hospitality up 47,000. Construction did do well, 19,000, but manufacturing was down 6,000. I see a little bit of a bump up in the probability of a December rate cut, but it's really marginal. And essentially, it seems to me, Becky, that the market may have moved on. Given those minutes yesterday, where I'd like to point out a week ago, I said that Powell didn't have the votes for a rate cut. I thought that was sort of a radical point of view out on a limb. I maybe was not radical enough. A lot of the FOMC seems to be against this additional cut, having done the October cut. And I think maybe the best way to put it is the market has moved on. I mean, they're looking at NVIDIA. They're looking at earnings. They're looking at other stuff. The dollar's stronger. And I'll just make one other point, slightly political, which is that Powell may be doing Trump a favor by keeping rates on hold here because it's helping deal with the inflation problem. And we know that's a big part of the political problem here.
Careful who you say that around. He's going to fire your butt, too. Hold on to that thought for just a moment, Steve. Let's bring in Mike.
Should have happened long ago.
Yeah, Mike, let's take a look at the markets today. How much of this do you think is because of what we're hearing with the jobs number? But really, how much of this is driven by what we heard from NVIDIA last night?
Well, Becky, I think we did get an extra little bump to the upside in the equity futures after the jobs number. And I think that shows you that investors have craved reassurance that the economy was at least hanging in there. Once we've gotten and digested the notion, as Steve's been reporting, that there was a lot of resistance to the idea of a December cut. Once those probabilities came down, well, you want to make sure the economy was not also sliding at the time. Of course, this is old numbers. It's September. It's not dispositive. But I think it's worth noting that this is the economy that was in place when we had the meeting for which we heard the minutes yesterday. So this was the economy they were sort of responding to in general. And I think it makes sense that we're kind of in tune here. And the September projections by the median for unemployment by the end of the year was 4.5%. We're not going to know if we're there or not, but I think we're sort of still within the bounds of what was expected to be the economic conditions at that time.
Hey, I want want to go back to Rick for a second. Rick, just the unemployment rate ticking up 4.4% versus 4.3%. You pointed to that as something that might bolster the Fed's case, but you don't think they should be listening to that either.
No, I personally think that as much as Mike is right, that this is a bit of a rear view mirror number, and it does kind of correlate with the minutes to the meeting that we had yesterday. I think there's a resurgence of economic activity. And I know that there's lots of anecdotal data that goes both ways, but I think it's possible that we're seeing jobs deteriorate and then come back a little bit. And I think with regard to the economy in general, I'm very optimistic. Now, just because 4.3 to 4.4 might bolster the probabilities, as Steve pointed out, in a small way, I would acknowledge that. But I think in the grand picture, Mike's nailed it, that between NVIDIA and the state of the economy, the turn that we are seeing now in markets is, instead of only looking for easing from the Fed to be a big positive to bolster prices, we're now seeing that an economy that is in sliding is a positive, and it might give us solid rates that don't go down, and it might give us better numbers on the equity side.
Hey, Mike, characterize your thoughts on the volatility we've seen in the markets with all the concerns about what NVIDIA might say last night, then the relief based on what they did say, and what that means for the broader markets.
Well, there was obviously a reset in attitudes toward AI, the risk-reward perceived in the market. There's a lot of froth that built up into the late October highs in the market. A lot of that has been flushed out. And NVIDIA's numbers, I think, first of all, reinforce confidence in the AI hardware food chain, the infrastructure trade. That's what you're seeing going up. I would point out, NVIDIA's bouncing back to levels we were at 10 days ago. Okay, the S&P is going to bounce to levels we were at like last week. So it's not as if we're up and away again, but it's reassurance based on kind of building up of anxiety around the sustainability of this spending. What it doesn't answer is the outlook for all these companies that are giving NVIDIA all these orders and bolstering so much free cash flow in NVIDIA's bottom line. So we still have that debate out there as to whether it's building towards some, perhaps unwise or ill-advised investment, but we're not close to that moment of reckoning, and I think the market can sort of say, okay, we had a 5% pullback in the S&P, a little bit deeper in NASDAQ. We had Meta go down 25% on these concerns. Oracle's 35% off its highs. Microsoft's lost $600 billion in market cap since late October. Maybe we've priced in a more cautious outlook, and we can have a relief trade here in the Mag 7 at the same time the economy maybe is going to hang in, because there has been unease about the consumer cyclical parts of this market. So I think it's more we can find some traction here and feel as if things are not worsening in an observable way.
Steve, really quickly, we've got to run, but we've got Roger Ferguson next. What would you most like to hear from him?
It's the read of the household report that I'm trying to dig into right now. And I don't see, I saw the participation rate go up. Part-time for economic reasons went down. Those not in the labor force went down as well. The Fed's going to look to the household report for signs of tightness in the labor market or looseness in the, just how much slack is there. So that's, I think, a key. And maybe ask him this question, Becky. If the jobs numbers for October and November are coming out a week after the Fed meeting, should the Fed move the meeting to after the jobs numbers come out?
Oh, that's a good question. Okay. Gentlemen, thank you all. One of my favorite roundups to have you three brainiacs talking us through all of this. We'll see you guys all later. Thank you. All right, up next, as we mentioned, former Vice Chair Roger Ferguson will join us. We'll talk to him about what he's seeing with all this. In the meantime, also take a quick look at Warner Music Group reporting fourth quarter results. Revenue came in at revenue of $1.87 billion, was ahead of expectations. That stock is up by 2.3%, and we will be speaking to Warner Music Group CEO tomorrow morning. That is right here on Squawk Box. We'll be right back.
Order canceled. Order
Thanks
submitted.
for walking us through the plan.
Have fun with Lizzie this summer.
Doors connect us to what's important. A dedicated Fidelity advisor can help you open those doors. Backed by a team of specialists, they'll help you build a personalized investment strategy. Doors were meant to be open.
Order filled.
The system is outdated and archaic and vulnerable
Order
to title
submitted.
fraud, a growing scam the FBI now calls house stealing. Scammers can now easily download and
Order
forge
filled.
one document, apply one fake notary stamp, and then file it with the recorder. Just like that, the property has been taken out of your name. Then they borrow against your home using your equity.
Find out if you're already a victim. Go to HomeTitleLock.com now.
This is the story of the one who knows half-baked preparation leads to downtime that could bring the whole workday to a standstill. That's why she relies on Grainger. With professional-grade products and next-day delivery, Grainger helps ensure her team, and a whole lot of donuts, make every day a little sweeter. Call, click Grainger.com, or just stop by. Grainger, for the ones who get it done.
Your shipping manager left to find themselves, leaving you lost. You need to hire.
I need Indeed.
Indeed you do. Sponsored jobs on Indeed are 2.5 times faster to first hire. Visit Indeed.com/hire.
Consumer Reports rank
We just got the jobs number and the initial jobless claims. For more insights on the numbers and the possible implications for the Fed, we want to bring in Roger Ferguson. He is the former Fed vice chairman, also a CNBC contributor. Roger, lots of questions here, but overall, how do you read these numbers?
I think all these numbers suggest an economy that's still hanging in there, not a dramatic move one way or the other. People should take note of the slight uptick in the unemployment rate, but labor force participation still looks pretty strong. Average hourly earnings certainly looks strong, or strong enough. And so I don't think this sort of tilts the cut decision much one way or the other, frankly. Anyone can look at this and find what they want in it, but overall, I think this is a sign of a labor market that's hanging in there and an economy that's hanging in there against the background, as you pointed out, of equity markets that seem to be rallying.
Steve Leisman just asked a very good question. He was wondering if we're not going to get the next labor number until a week or so after the next Fed meeting, should the Fed move its meeting so that they can actually have up-to-date data?
I heard Steve ask that question. I've been noodling on it. Great question. On balance, I think they probably shouldn't. And here's my thinking, which is, there will be almost all the time there's some incoming data that someone may want. Moving it around, hoping for some breakthrough data, I think probably sends the wrong signal. I can understand why people are asking the question. The reality is partially because I think the markets are sort of moving, or the labor market is sort of moving sideways. I don't think it's going to resolve the question one way or the other. And frankly, if it comes in, those reports come in a way that's really surprising one way or the other, the market will certainly react to it, which will, get to kind of be the stimulus or restriction that's being called for. So I understand why Steve asked the question. I'm not sure I'm the most articulate on why I think they shouldn't move it. But I just feel as though that's sending a signal that they're being sort of whipsawed by a bunch of forces, including government opening and closing. And I think they have decided they have enough data to make intelligent decisions. And this December meeting.
Let me argue back on the other side of that, Roger. For a Fed that claims to be data dependent, hard to make those decisions when you don't have the data. And I get you don't want to be whipsawed by a lot of different things, but
Hi guys, see you guys tomorrow. Toodles, maybe Monday. Bye.
Maybe the inflation data is more important than any of the rest of this, because